Hello, how you doing? What's up, good people? Hey, welcome back to Stock Up with Larry Jones. If I say something that you do like, please hit the like. And if you're new, hit the subscribe and the notification bell as well, all right? Make sure you don't fall for any spam in the comment section. And at the end of this video, please check out my links below in the description. Let's talk about the Fed minutes. As a matter of fact, we're not just going to talk about the Fed minutes. Let's actually go ahead and play them.
Early November meeting said that ongoing rate hikes would be appropriate. A substantial majority support likely slowing the pace of tightening soon. That really does set up for a 50 basis point rate hike in December. A few participants, notice the qualifier, a few suggested it was better to wait to slow hikes until it was clear that inflation is receding. So that is not where the center of the board appears to be. Members emphasize it's more important to consider the peak rate over the pace of future hikes. In other words, that where the Fed is going is more important than the pace that it gets there. Many participants said the effects of the rate hikes were, quote, still quite uncertain. Some of those people are in favor of either lower rate hikes or slower rate hikes. Many participants said the full extent of policy tightening was, quote, yet to be realized. Risks to the inflation outlook were high, tilted to the upside. Recent inflation data was higher. Remember, this came before the recent November. The meeting was before the recent October inflation report that came out in November. But inflation at that time was said to be more persistent than anticipated. Tentative signs of labor market moving towards better balance. And we've heard some officials talk about seeing some signs of slowing in the labor market. Risk to the economic outlook, however, weighted to the downside, particularly due to global headwinds from China and the Russia-Ukraine war. And they were seeing softening in consumer and business spending growth, although I have to say we got data this morning that will lean against that idea of business spending slowing. And of course, some important information here on the Treasury market. They saw the function of the Treasury market being orderly, an important assessment, given that they are shrinking their balance sheets. The higher mortgage rates were notably restraining housing activity. One other thing, several participants said tightening global monetary policy could spill over to the U.S., and we heard that from Mary Daly last week, who said that was one of her reasons why she thought there was maybe more tightening out in the economy than is in the actual funds rate, because in part of global tightening as well.
So there you hear it, good people. There you have it, should I say. It was actually a lot of good news. And as you could see that the market was reacting positively. The Dow jumped. Let's take a look here. As you can see, all of the indices are green now. As you could see right here when the minutes were released, right here at 2 p.m. and boom, it popped up really nice for all the indices. Now, we've been here before. We know that today is Wednesday at the time of recording this. The market still needs time to kind of unpack even this Fed meeting. We also know that tomorrow, Thursday, Thanksgiving, is a holiday, so the market will not be open. But Friday, we have a half a day. So remember, Friday, only the first half of the day, and the market will close on Friday. So now, how is the market going to take this news? We truly don't know. Don't be fooled by today's rally. The market will still, even though it sounds like positive news, the market will still show you what it really thinks on Friday, right? And so let's look at Friday's half a day. Remember, Thursday is no market. The market is closed. Now, we have Cyber Monday following Friday. So for those of you that are in the e-commerce space like Amazon, that type of deal, just be mindful that we'll probably have data on Cyber Monday on Tuesday. Me personally, I do have some Amazon options, and I plan on being out before Tuesday's numbers come out. I'm buy the rumor, sell the news on that. You do. Anything I say is not a suggestion for you to buy, hold, or sell. All right. And so there we have it. I just wanted to come in and give you guys this breaking news. Also, too, just remember, good people, that the FOMC meeting, right, when they actually do the rate hikes will be, what is it, 13th and 14th? So the 13th and 14th. So the 14th will tell you when there's going to be the rate hikes, right? Remember that. But also just realize that most think it's been priced in at 50 basis points, all right, on the 14th. So remember, the 13th and the 14th is the next FOMC meeting. 50 basis points have been priced in to where we think the Fed is going to go. You just heard the reading of the minutes, right? So that will be for December. There is no January FOMC meeting, and then in February, I had to get it straight, good people. We are expecting another 50 basis points and then 25 after that, all right? So December, 50 as of right now. That's what I believe the market has priced in. So December, 13th and 14th, we are expecting 50 basis points, right? January, nothing. February, 50 basis points, all right? And then March, we're expecting 25. I believe the market will take that and run with it, right? Now, I still say that we could close out the S&P at 41, like everybody, all of the analysts have been suggesting that we could have a bounce and close out December at 4,100, all right? And around 41, should I say. And that's where I see. But I also see a hard recession coming in 2023. And so on yesterday's video, and I'm going to leave it in this box, I talked about Tesla and where I thought it would be. And some commented that here he goes Tesla hating. I'm not Tesla hating. I'm a Tesla bull. But I just think that it will be coming down even lower. One of the banks, one of the major analysts have a price target of about 150s. And I'm cool with 150s. I'm cool with 130s. I'm cool with 150s. But I just still stand by, regardless of what goes on to this Christmas rally, then reality sets in 2023. And when that sets in 2023, that's what I personally will be buying in. So if you dip bought right now, you're doing well, great for you. Now, I still have some Tesla in my $5 a day DCA. I never stop that, okay? And so, but when I get ready to put in a lot of money, I'm going to be doing that next year when I think the harder recession is coming. And I do believe Tesla will be lower than where it is now. All right, good people. Hey, make sure you check out all the links below. You guys know we're cashing up with Mumu. You guys know that we're DCAing with Weeble. 2 top links below. Make sure you check out this video in this box. Live, love, laugh, and learn.